We're going to start off here in New Hampshire with George. George, you're with Allworth's Money Matters.
Hey guys, how you doing?
We're great. Very good, yeah.
Yeah, good to hear that you guys finally made it to the gym this year.
Oh, yeah, you're piling on? I tried yoga too, by the way, but we're not going to get into my physical. What can we do for you?
Anyway, yes, my question is more for my ex-brother-in-law instead of myself. My ex-brother-in-law, he is 60. He's never married. He has no children. He smart guy, has a really good job in accounting. 10 or so years ago, his parents passed away, and he lives in his parents' house, which he co-owns with his 3 siblings. He also bought a house of his own about 15 years ago. It's now worth $500,000, and he has 50% equity in it.
Okay.
He rents that out for about $2,000 a month.
Okay.
And the big question comes is that he would like to take that house that he bought, sell it, and convert it to Bitcoin. And I've kind of talked to him a little bit, because Bitcoin is very volatile, obviously very speculative. And, the thinking being that, as you get older, you probably don't want such a high percentage of your portfolio into something that risky, right? But his side of the story, right, is that Bitcoin has doubled every year for the past 4 years.
Okay.
Which may be true, right? That may be true.
Well, it wasn't a straight line, but keep going.
Yes, yeah, exactly. Like if you look back on history, right, there's a lot of things like, tulips and Beanie Babies had a good couple of years
That's
as well
exactly
back
right.
in the day.
And I'm sure there's other assets that are up 100x over that period of time as well.
Brilliant.
But yes,
Okay.
it's a popular one, and it's a big one.
And what did you tell him to do? Well,
First
of all, did he come to you for advice, or did he just tell you he was doing this?
No, he didn't come to me for advice. No, he is something I just happened to find out and try to, it's one of those things where try to talk him out of it, but, Bitcoin could go up 20x and then I'm on the hot seat. Yeah.
I'm asking this seriously. Are there any other, mental issues? Truly, what would cause someone to actually act in this manner? No sane 60-year-old
is going to take that big of, I don't know what he has in savings, but does he have a lot in other assets?
Like, is this,
if he had $10 million sitting in other assets,
you'd be like, go for it. Yeah, it's 2.5% of the portfolio.
I'm sick of dealing with this rental. I'm going to take my $250,000 out of that, and I want to buy Bitcoin. Fine. If you had $10 million,
if you have $1 million,
then it's insane.
Yeah. Okay. Yes. That was kind of my point of view. I think you should, especially, at any age, you should diversify, but especially as you get closer to retirement, right?
Yeah. And as a percentage of the portfolio. Scott and I were just talking before the show about bad investments we have made. We were.
Yes.
Right. We were. That we have made. Right.
Yeah.
And then
not everything works out.
And then we reminded ourselves, but many,
almost all,
great investments, but. Right? Because, in fact, we're human with our own emotions. We have a tendency to dwell on the losses. What percentage of your portfolio do you think this is? Is it little or big to him? Or
I would say it's I don't know, but I would say it's at least, 20, 30% if I had to guess, but I don't really know.
Yeah. What if we gave you the right answer, what would you do with it?
Oh, I'm going to, send him this podcast so he can hear.
Okay. Well, it's crazy. It makes no sense.
It's pure speculation.
Why Bitcoin? What's wrong with NVIDIA?
What about Dogecoin?
Oh yeah, Doge. Why are we stopping at Bitcoin?
Yeah, exactly. Like if you were to take even the volatility of Bitcoin out of it, I think if you were to put, as a 60-year-old, if you're to put a large percentage of your portfolio on any one stock,
that would be foolish
your
too.
retirement quality of life is going to be completely tethered to that one investment.
George, if he was my relative and he shared this with me, I would say to him, "You're out of your mind. That's just stupid." And then I would leave the conversation there.
And you can't live with me.
That's fair enough. And I would leave the
and also, I have had that conversations with many people. They want to do something that's like, look, if it doesn't work out, if that's what you want to do, if you want to follow, if instead of taking my advice, if you want to do that, that's fine. Just remember, you can't live with me.
We have fired clients over.
Absolutely.
They're telling us they're going to do something, and I'm like,
what's
I'm
the
not going to
point?
be party to this.
No, because you know how it's going to end up.
I'm not. And maybe it ends up great. Maybe he's 100% right. Maybe he is the most brilliant guy in the room, and it goes up by tenfold. And now his 250 grand would be less than 250 after taxes. It's probably 200,000. It turns into 2 million. Is his life better? Is he happier?
What
I
if it
don't know.
goes to zero?
But what if it goes to zero? What do you tell that story? Tell the story about the guy with the fishing boat.
Yeah.
I love that story.
I love it too. That's why I've told you. This was in the .com era.
So 98?
Probably 99, maybe early 2000s. Maybe early 2000s.
Okay.
And a client called me up and he says, Scott, I'm thinking about taking half my portfolio and putting it in the cubes. Right? That was
What's
the
the
NASDAQ.
QQQ?
All tech. This was it had a huge run up, just like your ex brother-in-law saying, "Here's how great it's done the last 4 years." NASDAQ had been on fire; it was up 85% in the year 1999, and so I said, "Let's call him Bill." I said, "Bill," and Bill had a house in Northern California, and he had a house up in on the coast in Washington.
I thought it was in Alaska.
I changed this to the.
It was Alaska. It was Homer.
I'm trying to keep a little anonymity here.
Okay.
So let's say it's not Homer.
I'm not helping.
I'm trying to change a little of the facts here. I should have changed Bill's name to something different while I was at it. No, I didn't. So
His name was Frederico.
So he spent the majority of his time in his cabin on the water, out in his fishing. He fished all the time. He loved it. Had a fishing boat. And he called. He wanted to make this move, and he says, "What do you think about it?" And I said, "Well,
Half of his portfolio, all tech.
half of his portfolio,
And he was
all
living
tech
off
stocks.
Yeah, and he was living off the portfolio.
Correct. He was retired." And I said, "Well, here's the thing, Bill." I said, "If you're right, we can trade in that fishing boat for a bigger fishing boat with more electronics and all the goodies on it. But if we're wrong, the fishing boat's gone, and probably the cabin as well."
All right. So that you did.
So I framed it back to what this is not just numbers on a spread on a statement, right?
This is life.
This is
is
how it
lifestyle.
translates.
Yeah, no one's going to starve in America unless you're mentally ill or have no access to it. But it's lifestyle.
What do these dollars actually mean? And so the concern that you have, George, obviously that we have with this 60-year-old male, that if he probably doesn't have much in savings and he takes his one asset he does have and puts it in Bitcoin,
Yes.
I would just tell him you can't live with me.
Yeah, and it's your ex-brother-in-law, which I think is interesting in of itself. Yeah, I mean it's asinine.
I think people.
Am I allowed to say
think,
that? Yes.
I think
It's crazy.
It's all about probabilities of outcome, and particularly as we get older, we don't have the time to make it back up.
Yeah, if he was 30, like go for it.
Whatever, it's not going to make it.
Yeah. And again, you can't live with me.
But it's coming back to like what happens in the best case scenarios, but what are the worst case scenarios here? Like when we do financial plans with people, we look at what happens if the day after you retire, we go through another financial crisis.
So probabilities of success or failure.
Correct. And most people are much more concerned about maintaining their lifestyle than they are about becoming wealthier. And if you do something that's suddenly going to have a 60% chance that your lifestyle is going to go backwards, most people are like, I'm not going to take that.
That's right. Unless, right? And it all gets down to what percentage of his portfolio is this. But you're right. You know exactly. And you're going to send him this podcast?
Oh, yes.
That's all we need is another negative review.
All right. Appreciate the call,
Appreciate
George.
it.
All right. Thanks, guys.